Hey, universe and mining family. Grab your shovels and your pickaxes. Welcome to the show. I'm Nemesis, and of course, I'm not your babysitter. Do your own research, but let's dig in. Oop, I've got my little smash the like guy up. Oops, I forgot to turn him off in the last one. Hey, that just tells me, smash the like button, guys. But this one is actually kind of an interesting article I came across. Just 2 ASIC Bitcoin mining rigs remain profitable in current markets. Now, this one is kind of like, depends on how you want to look at it. So let's dig in with this one, how they're painting the picture with this one per se. Amid the cryptocurrency market crash, even the newest crypto mining machines are struggling to steal profits for their operators, according to real-time data published by mining profitability site asicminingvalue.com. Now, I do use this myself, but they're going off of December 11th, which that's today actually. So I'm not sure what time that they posted this, and kind of sit there and show you why I say that. AMV is a site that calculates real-time profitability rates for ASIC mining hardware, and they also will post in hardware that's to be coming to kind of help with the hype of everything. The hardware that uses the application-specific integrated circuit, aka ASICs, the chips, tailored to efficiently mine cryptocurrency based on a specific hashing algorithm. Updating every minute, the site calculates profit yields for specific miners based on current power costs and network difficulty, block rewards, and currency prices, cryptocurrency prices. And for kind of, it's, you know, for the most part, it gives you a ballpark. It's not verbatim. So don't get this. Don't even sit there and think, oh, I look at this is what it's going to be. No. As more miners go onto the market, your profitability goes up. As market prices come down, profitability comes down, but rewards. Think about this one. You got to look at the rewards per hash power. We're dealing with cryptos. Markets taking a crash, you got to start looking at what kind of your profits is your rewards. So when you're on the other side of the down market, how many rewards you've gotten during that down market is going to see how well you were doing during that down market. And for me, this down market's pushing off a lot of people off the market, which is dropping that difficulty rate, which means that I get more rewards per hash power. Just think about that. More rewards per hash power. As of press time, the site indicates that among ASIC mining machines generated to mine coins that are based on the crypto hash function SHA-256, such as Bitcoin, Btrash, and only 2 are currently making any profit. Both models were released in October of this year and show 58 to 21 cents in daily profits. Now again, that's kind of depends on how you look at it. And I'll show you this too. And as soon as I get to the bottom of this, the currently most profitable machine, the IBIT 11 Plus was released by Chinese mining hardware manufacturer eBank Communications and is currently priced at $2,024. Yeah, whatever. That's the end of my workday. It's just a little over $2,000, and that's, to me, not worth it. I'll stick to my GPUs. Thank you. As reported just this week, mining manufacturer giant Bitmain has announced it will be closing its development center in Israel and firing local employees. Wow. I heard a little something about this. That's insane. With the local reports attributing to the decision that the current situation and the shakeup of global crypto market. I wonder if this means that they're also not going to be going into Texas in the United States. Yeah, I bet you they're going to stay right where they're at now. This October, even ahead of the recent market slump, a report from crypto outlet Dyer indicated that the crypto mining is gradually becoming profitable only for big guns. Nope. Why are they the ones shutting down? If it's so profitable for the big guns, why is it that they're turning off and I'm getting more rewards? Think about that. These big guns, this is where I keep sitting here saying, I will outlast all these guys. I have not gotten to big guns that I can't afford to pay my electric bill. And the ones that have these deep pockets, it depends on how long this crypto winter goes, depends on if they can handle it. I mean, just think about that one. Pockets are only so deep if you are mining at a loss. But if you've budgeted yourself to never trade any crypto and you just pay your electric bill, how sustainable is that compared to having a quote-unquote deep pocket? Think about that. A Cointelegraph, an in-depth report published this November, analyzed the impact of the protracted crypto bear market on the mining landscape. Included its impact on global sales of graphics processing units, GPUs. Now for me, these GPUs, they're kind of going on sale. I absolutely love this. I'm not sitting here telling you, go run out and buy stuff. I don't care what you really do. For me, I'm looking at dollar cost averaging into my rigs, and I'm getting more rewards per hash power for my rigs that I do have. Bye big, quote unquote, as they would say, big guns with these supposed deep pockets. You got Gigawatt, bye bye. You got other places, you got what's her name? Oh God, it's a girl, Christy from Minority or whatever. Her, she had over 12,000 ASICs, I guess. Bye bye. She's trying to figure out what to do with it because she can't afford to keep those bad boys running either. Look at that. These supposed big guns can't handle the market dip for prolonged periods of time. And we're not even at a full year yet, and they're already dropping like flies. So, have I stopped mining? No. Am I going to? No. Do I own a few ASICs? Yes. Do I look at the same information these people were? Actually, I do. And this is what I was sitting here talking about. Let me actually just switch over screens. Make myself just a pinch smaller so you can see everything. There we go. And as you see, it's like this is kind of what they were showing right here. Where actually there's 4 that are still in profitability here. This one's barely profitable to how they're showing it. 5 cents to 82 cents a day. And these are all SHA-256s, but this is also being applied at 13 cents. Now, for me, I'm at 10. Apply that, and let's reset this, and then all of a sudden the EBIT E11++ is now a lot more profitable. I mean, there's still electricity that, this is above the electricity right here. Now the ASIC Miner 8 Nano Pro is actually a little bit better. Look at that. I mean, it all is perspective when you're coming down to looking at mining. Are you looking at your complete bottom line on this? You could. I mean, that could be the way that you're looking at it. Are you exchanging your coin out every single day? Then you're looking at your bottom line every single day. For me, I hodl that stuff. And whenever I'm sitting here and I look at the bigger picture and people, it's like I don't go after Bitcoin. It's too competitive. It's a race that I'm not going to try to win. I don't have enough money to do this. But I'll sit here and look at something like this. And this is, again, going according to how the article was, where they were using 13 cents a kilowatt hour. And I've got a couple of these, and it's showing if I was paying 13 cents a day, I would be losing 48 cents per E3 Antminer that I would ever own. But thankfully, that's not what I pay. Oops. I hit the wrong button. So I can go over here. I hit my 10 cents, flip over, and all of a sudden my E3 Antminer, I'm now making 3 cents a day. Does that make the world better? No. But at least it's it's paying for the electric to keep it running. What's nice about this is that, again, the difficulty rating is dropping, which means that this little bit of hash power, 190 to 200 mega hash, is able to generate a half a coin. I mean, think about that. At the beginning of the year, this would have generated you a quarter of a coin at the beginning of the year. I mean, think about that. Now it's making me a half a coin. I mean, I'm not going to sit there and, quit my job on 3 cents a day. Ooh, I'm making big money now, I'm just above broke. But my rewards for contributing this hash power onto the network is a lot better. And that's how I kind of look at it. Can I sustain this how I'm mining? Oh yeah. It's not hurting me, not one bit. If I were to scale up at the beginning of the year and would have dropped in, $500,000, $1 million, I'd probably be closing my doors right now, just like all these quote-unquote big guns that have these quote-unquote deep pockets that can't survive. They have a bottom dollar. Their electric bill is in the $10,000-$20,000 range, where I'm not anywhere near that. So who's gonna come out of the winner on the other side? I'm betting on the little guys. Every little guy that's watching, I'm betting on you that you're gonna be the ones that are prevailing, not these supposed big guns. So with that being said, guys, what do you think? Drop your comments in down below. Are you rooting for the big guys, or you think the little guys are going to dominate this during this crypto winter? Drop a comment in down below, and while you're down there, smash that like button, hit the subscribe and the bell notification. And with that, of course, I will see you on the next one.